Hey everyone, and welcome to another deep dive. Today we're going to be taking a look at JPMorgan Chase,
Okay.
one of the biggest financial institutions really anywhere in the world.
Absolutely.
And we've got a really interesting set of data here. We have their annual reports from 2007 all the way through 2023,
Wow.
which is a really long time. It is a really tumultuous period for not only the global economy, but also for financial markets and the whole financial industry.
Yeah, it's like a front row seat to history.
Yeah, and so what we really want to do is try to figure out from these reports, what were the catalysts that drove their growth? What were the risks that they perceived along the way, and how did major themes like, the rise of China and technology disruption change their business?
Yeah, it's going to be interesting to see how they navigated all of that, especially since they're such a big player.
Yeah, they are a whale. So let's start with 2007. And the report from this year, if you just read it without knowing what happened after, it seems like the world was their oyster. Record earnings, they were buying back stock. Everything was great.
Yeah, it was the era of irrational exuberance.
Uh, and they even claimed they were being responsible about this whole subprime mortgage thing. They tightened their lending standards 6 times.
Oh, wow.
They thought they were being really careful.
Well, hindsight is 2020, right?
Yeah.
Back then, everyone was so optimistic. The idea of a global financial crisis seemed impossible.
Yeah. I guess no one really saw it coming.
Even the big players, they didn't grasp the risks that were building up in the subprime market.
And then, boom, 2008 hits.
Everything changes.
Yeah, the tone of their report totally shifts.
Yeah.
It's all about recession, credit crunch,
Yeah.
the housing bubble bursting.
Yeah, it's a stark contrast to the previous year.
And get this, they even admit that the Basel II regulations, which were supposed to make the financial system safer, actually made things worse.
Yeah, that's because those regulations allowed for too much leverage in the system, basically. They gave everyone permission to build these giant financial structures on very shaky foundations.
It's like they were building skyscrapers on sand.
Exactly, and when things started to crumble, the whole system came crashing down.
Yeah, and the thing that's really scary is that even assets that were considered safe suddenly became impossible to sell.
Right, it was a total loss of confidence.
Like everyone's just running for the exits.
It was a domino effect of fear and distrust, and it just amplified the crisis.
And in the middle of all of this chaos, JPMorgan Chase pulls off an incredible feat. Their investment banking division actually reports record performance in 2009.
Yeah, that's remarkable, isn't it?
How do they manage that?
Well, they made some bold moves. They acquired Bear Stearns and Washington Mutual when those companies were on the verge of collapse.
It was like they were swallowing up their competitors while the world was burning around them.
Yeah. But it was a brilliant strategy. It allowed them to expand their market share, gain access to new talent and technologies, and client relationships.
So it wasn't just about survival, it was about positioning themselves for the future.
Exactly. They were playing the long game.
And it wasn't all about Wall Street either. They also doubled down on Main Street, lending billions to small businesses when everyone else was pulling back.
That was a smart move. It helped them build deeper customer relationships and gain market share at a time when many banks were retrenching.
It's like they saw an opportunity amidst the chaos.
And they seized it.
So they were firing on all cylinders, acquisitions, branch expansions, global outlook. But all of that growth must have come with a ton of risks.
Oh, absolutely. And one of the biggest risks they highlighted in their reports was the constantly evolving regulatory landscape.
Yeah, after the 2008 crisis, regulators came down hard with all these new rules.
Like Dodd-Frank and Basel III, which were major overhauls of the financial system.
Yeah, I remember those. They were huge.
JPMorgan Chase had to dedicate a ton of resources to comply with all these regulations. It was a constant challenge.
And I bet it wasn't cheap either.
No, it wasn't. They even raised concerns about some of these rules, arguing that they could actually make downturns worse instead of better.
So they were basically saying, hey, we get it. You want to prevent another crisis. But some of these rules are a bit overkill.
Yeah, they felt like they were being penalized for being big and successful.
I can see their point, but I also understand why regulators were being so cautious after what happened.
Yeah, it was a delicate balancing act.
And then there was the whole too big to fail problem.
Right, as JPMorgan Chase continued to grow through acquisitions, they became even more systemically important.
Meaning if they failed, it could bring down the entire financial system.
Exactly, and that created a moral hazard because they knew that the government might have to bail them out if things went wrong.
So it's like they had this implicit guarantee which could encourage them to take on more risk.
Yeah, it was a tricky situation.
Did they ever propose any solutions to this too big to fail dilemma?
They did. They advocated for a system where shareholders and creditors, not taxpayers, would bear the losses if a big financial institution failed.
So they're basically saying, let us fail if we screw up, but don't make the taxpayers foot the bill.
Yeah, they wanted a system that was more accountable and less likely to lead to moral hazard.
That's a pretty bold stance, especially coming from a bank that was considered too big to fail.
It shows that they were at least trying to be part of the solution.
But let's be honest, the real game changers during this period were China and technology. Those were the forces that really shook things up.
Absolutely, there were like tectonic plates shifting beneath the global economy.
And JPMorgan Chase was right there in the middle of it all.
They were one of the first big banks to recognize China's potential. They expanded their operations there and bet big on its growth.
They even announced plans to build a massive new headquarters in Shanghai.
Yeah, they were all in.
But weren't they also aware of the risks involved?
Oh, for sure. Their reports acknowledge the challenges of operating in China, things like trade tensions, geopolitical uncertainties, and China's own internal economic vulnerabilities.
So it was a calculated risk. They saw the enormous opportunities, but also the potential pitfalls.
Like trying to tame a dragon,
And what about technology? How did they handle that whole digital revolution?
they knew they couldn't afford to be left behind, so they invested heavily in mobile banking, big data analytics, and fintech partnerships.
So they were trying to become a tech company as well as a bank?
In a way, yes. They realized that technology was transforming the entire financial industry, and they had to adapt or die.
And I bet that wasn't always easy.
No, it wasn't. There were legacy systems to deal with cultural resistance to change and the constant pressure to innovate faster than their competitors.
It's like they were this giant ship trying to turn on a dime.
And they were doing it while being bombarded by these nimble fintech startups that were popping up everywhere.
Did they ever feel threatened by these fintech disruptors?
They acknowledged the competitive pressure, but they also emphasized their strengths, their size, their global reach, their deep relationships with customers, and their robust regulatory compliance.
So they were basically saying, we're the old dog, but we can learn new tricks.
Yeah, and they were pretty good at learning those new tricks.
It sounds like they were constantly walking a tightrope, trying to balance innovation with stability and manage all these different risks while still pursuing growth.
It was a complex and challenging journey.
And it's a journey that's still ongoing.
Absolutely. Stay tuned because in the next part of our deep dive, we're going to explore how JPMorgan Chase responded to these global shifts, particularly China and technology, and how they shaped their strategy to ride these waves of change. Picking up where we left off, the JPMorgan Chase's response to those, global shifts, particularly China and technology, is really fascinating.
Yeah.
Their reports really show that they weren't just playing defense, they were actively trying to shape their strategy to, ride those waves of change.
It's like they were trying to surf those massive waves of globalization and digitization.
Yeah, exactly. And one thing that really stands out is their focus on customer experience.
Okay.
They recognized really early on that technology wasn't just about making their back office operations more efficient. It was about delivering a better, more personalized experience for their clients.
But how did they actually do that? I mean, everyone talks about being customer focused.
Yeah, that's true. They actually put their money where their mouth was.
Okay.
They poured resources into digital initiatives, particularly in their asset management and global wealth management divisions.
Wow.
We're talking about hundreds of millions of dollars invested in online platforms, mobile access, even digital portals for research and analysis.
So they weren't just like slapping a website together and calling it a day.
No, not at all. They were creating a whole digital ecosystem for their clients.
I see.
They wanted to meet their clients wherever they were digitally speaking.
So what kind of impact did all of this have?
It was a game changer. For example, take mobile banking.
Okay.
JPMorgan Chase was one of the first big banks to really embrace the smartphone revolution.
Yeah, I remember that.
They introduced features like Chase Quick Deposit, which allowed customers to deposit checks just by taking a picture with their phone.
Yeah, that was huge.
It was like magic at the time.
It was, and did people actually use it?
Oh, yeah. In 2011 alone, their customers deposited over 10 million checks using that feature.
Wow, so they were definitely riding that wave of mobile adoption.
Exactly. They were making banking easier and more convenient for their customers.
But did they just stop there, or did they keep innovating?
Oh, they kept pushing the boundaries.
Yeah.
They added features like pay with points for their Amazon.com rewards Visa card, giving customers more flexibility and control.
Okay.
And on the small business side, they launched Jot, which was a mobile app specifically designed for their Inc. business card holders to track expenses.
So they were really trying to stay ahead of the curve, anticipating what their customers would want next.
Yeah, it's like they had a crystal ball showing them the future of banking.
Or maybe not a crystal ball, but they were definitely using data to their advantage.
That's right. This is where we see the rise of big data and its impact on the financial industry.
Yeah, everyone was talking about big data back then.
But JPMorgan Chase wasn't just collecting data. They were trying to transform it into actionable insights.
But that's the hard part.
Hmm.
Right? It's one thing to have mountains of data, but it's another thing entirely to make sense of it all.
Exactly. And they actually did a pretty good job of it. They built some really impressive in-house big data capabilities.
Oh, wow.
Yeah, they had teams of data scientists embedded across their various business lines, crunching numbers and looking for patterns.
It sounds like a scene out of a sci-fi movie.
A little bit,
Yeah.
but it was real, and they were using this data for all sorts of things.
Like what?
Well, for example, they were using it for things like responsible prospecting in their commercial banking division.
Yeah.
They were also optimizing ATM cash management to make sure that the machines were always stocked.
That's smart.
And they were even using it to detect fraud in real time.
So they were using data to fight crime.
Yeah, in a way, their use of machine learning and fraud detection was particularly impressive.
Did it actually work?
Yeah, they reported significant reductions in fraud losses while also approving more legitimate customers who might have been flagged by traditional systems.
So they were basically building a digital shield to protect both themselves and their customers.
Exactly.
But all of this digital disruption must have also created some new risks for them.
Oh, absolutely. Their reports consistently highlight the risks posed by fintech and big tech competitors.
I bet that was a bit unsettling for them, this financial behemoth being challenged by all these nimble startups.
Yeah, they definitely saw these agile, digitally native companies as a potential threat, especially in areas like payments lending and wealth management.
It's like David versus Goliath, but with
Right.
algorithms and mobile apps instead of slingshots.
Yeah, a good analogy. Did they ever admit to feeling threatened by these fintech disruptors?
Hmm.
Well, they acknowledged the competitive pressure, but they also emphasized their strengths.
Like what?
Their size, their global reach, their deep relationships with customers, and their robust regulatory compliance.
So they were basically saying, we're the big guy, but we're not going down without a fight.
Yeah, and they were pretty good at adapting and evolving.
Yeah.
They invested even more heavily in technology, partnered with fintech startups, and even acquired some of their competitors.
So they were embracing the disruption, even using it to their advantage?
Exactly. They were playing both offense and defense.
But I imagine that this whole dance with technology and regulation was a delicate balancing act.
You're right. They consistently advocated for a regulatory framework that would foster innovation while also safeguarding the system.
So they were trying to strike a balance between embracing the future and ensuring stability.
Exactly. And they didn't shy away from expressing their views on regulatory matters.
Did they ever clash with regulators?
They definitely had their disagreements. For example, they were very critical of the GSIB surcharge, which was a capital penalty imposed on systemically important banks.
So basically because they were considered too big to fail, they had to pay an extra penalty.
Yeah, they argued that the surcharge was flawed and could actually harm the competitiveness of the U.S. financial system. They also pushed for reforms to capital rules, arguing for more consistent, transparent, and risk-based standards.
So they were trying to shape the rules of the game, not just play by them.
Yeah, they were very active in the regulatory debate.
But it wasn't all about profits and regulations, right? They also seemed to be talking a lot about social responsibility.
That's another key theme that emerges from their reports.
Okay.
They saw social responsibility as both a moral obligation and a smart business strategy.
It's easy to be cynical and say that it's all just PR.
Mm.
But did they actually put their money where their mouth was?
They did. They invested heavily in community development, affordable housing, and small business growth.
So they were trying to be good corporate citizens.
Yeah, they recognized that their long-term success was intertwined with the well-being of the communities they served.
And did they get any recognition for their efforts?
In 2017, Fortune magazine ranked them as the #1 company changing the world for their work in Detroit and other cities.
Wow, that's a pretty big deal.
Yeah, it was a significant accomplishment.
It sounds like they were taking a holistic view, recognizing that a healthy society and a healthy economy go hand in hand.
Absolutely. And they were willing to put their resources behind that belief.
Did this focus on social responsibility extend to other areas?
Yes, it did. For
Yeah.
instance, they pledged $30 billion in 2020 to address racial inequality.
That's a massive commitment.
They recognized the importance of closing the racial wealth gap and supporting economic empowerment in underserved communities.
What drove that decision?
They saw it as both a moral imperative and a business opportunity.
So they were acknowledging that the system wasn't working for everyone, and they wanted to help fix it.
Exactly.
Did they face any pushback or criticism for those efforts?
Of course, there were always critics who questioned their motives or argued that they weren't doing enough.
Yeah, that's always the case.
But JPMorgan Chase consistently emphasized their commitment to making a positive impact on society, both through their business practices and their philanthropic activities.
It sounds like they were trying to navigate a very complex landscape, balancing the demands of shareholders, regulators, customers, and communities.
Yeah, it was a constant juggling act.
Did they manage to keep everyone happy?
Well, that's always a challenge, but their consistent message was that doing the right thing for all stakeholders was ultimately in the best interests of the company.
So they were trying to find that sweet spot where everyone benefits.
Exactly. And that's a tough thing to do, but they seem to be pretty good at it.
I'll say. So we're back for the final part of our look at JPMorgan Chase. And we've seen them go through a lot, financial crises, tech disruption, even trying to be, a force for good in the world. But the big question now is, can they keep it up? Can a company this big really stay agile and, relevant in a world that's changing so fast?
Well, that's the billion-dollar question, isn't it? And their recent reports really highlight some of the challenges they're facing. And one that really jumps out is this increasingly, complex geopolitical landscape.
Yeah, it's a mess out there.
It is trade wars, rising nationalism, all this political uncertainty. It's enough to keep any CEO up at night, especially when you're a global player like JPMorgan Chase.
Yeah, it's like trying to run a marathon on a treadmill that keeps changing speed and incline.
Exactly. And then you've got this other massive wild card, climate change.
Yeah, it's not going away.
It's impacting businesses right now, and those impacts are only going to get more intense, and JPMorgan Chase is starting to take this seriously.
Oh, really? Absolutely.
Well, they've made commitments to align their financing with the Paris Agreement goals.
Okay.
They're recognizing that climate change isn't just an environmental risk, it's a financial one too.
So they're putting their money where their mouth is backing renewable energy and all that?
Yeah, they're investing in sustainable finance, but they've also been criticized for their role in financing fossil fuel projects.
Right. So are they really committed to sustainability, or are they just hedging their bets?
It's probably a bit of both, to be honest. They're a huge institution with a lot of different interests, and they're trying to navigate a complex landscape. But it's clear that they're recognizing the need to transition to a more sustainable future, both for the planet and for their own bottom line.
So it's like they're trying to turn this massive ship around, but it takes time.
Exactly. And then you've got the future of work, which is another huge unknown.
Yeah. Automation, AI,
Yeah.
all that stuff. It's both exciting and scary at the same time.
It is, and JPMorgan Chase is definitely thinking about this. Their reports talk about the need to invest in training and reskilling programs to help their employees adapt to these changes.
So they're not just going to let their workers fall by the wayside.
No, they're trying to be proactive. They're acknowledging that some jobs will disappear, but new ones will emerge, and they want their workforce to be ready.
It's like you're trying to build a workforce that's future-proof, but is
Oh.
that even possible?
It's a tough challenge, but they're taking steps in the right direction. They've even been vocal about the need for public policy solutions to address income inequality and job displacement.
So they're not just focusing on their own employees, they're thinking about the bigger picture.
They're engaging in those broader conversations about the future of work and the impact on society.
But let's talk about leadership for a minute.
Yeah.
Jamie Dimon has been the face of JPMorgan Chase for what feels like forever. What happens when he decides to step down?
That's a question a lot of people are asking, but JPMorgan Chase has been pretty thoughtful about succession planning. They've identified potential successors and are giving them opportunities to gain experience and demonstrate their leadership skills.
So they're not just going to panic when Dimon retires.
No, they're trying to ensure a smooth transition and avoid any disruption to the company's operation.
Okay, good, because they're kind of important to the global economy.
They are, but let's be real. No company is perfect, and JPMorgan Chase has definitely had its share of scandals and controversies over the years.
Yeah, the London whale trading scandal,
Yeah.
the fines for manipulating energy markets and all that, those things really hurt their reputation.
They definitely face scrutiny and legal battles and some reputational damage, but they've also shown a willingness to learn from those experiences and make changes. They've strengthened their risk management systems, enhanced their compliance procedures, and taken steps to rebuild trust with their customers and the public.
So they're not just sweeping things under the rug.
No, they're trying to be accountable and do better.
That's good to hear. So as we wrap up our deep dive into JPMorgan Chase, what's the final takeaway? What can we learn from their journey, and what does it tell us about the future of global finance?
I think their story is a testament to the importance of adaptability, resilience, and a willingness to embrace change. They've shown that even the biggest institutions can navigate a turbulent world if they're willing to learn, evolve, and stay ahead of the curve.
Yeah, it's like they're this massive ship, but they're constantly adjusting their sails to catch the winds of change.
Exactly, but it's not just about being big and powerful. It's about using that power responsibly and making a positive impact on the world.
So it's not just about profits, it's about purpose, too.
Right. They've recognized that their long-term success depends on more than just making money. It's about building trust with customers, supporting communities, and contributing to a more sustainable and equitable future.
So what's the one big thing you want our listeners to take away from all of this?
That even in a world of rapid change and uncertainty, certain fundamental principles still matter. Things like integrity, accountability, customer focus, long-term thinking, and a commitment to excellence. Those are the principles that have guided JPMorgan Chase, and they're principles that can help any organization, big or small, navigate the challenges ahead.
Absolutely. Great insights. Well, that brings us to the end of our deep dive into JPMorgan Chase. Thanks for joining us.